HSBC extending losses. This is the US-listed bank after rescuing SVB UK. Now, HSBC bought the UK arm of Silicon Valley Bank for £1. That's right, £1. The move has been described by HSBC's boss, Noah Quinn, as, quote, excellent strategic sense. But let's see what the charts and what investors are telling us. Let's see if investors agree. Look at HSBC's shares there. They have turned much lower and extending losses there where my cursor is. Earlier in the day, we also saw a similar move in the banks in Japan, and some of the biggest banks in Singapore as well lost ground. All this came after some brief respite when the US government stepped in with a series of emergency measures to shore up confidence in the banking system after the failure of Silicon Valley Bank. This has marked the biggest US bank failure since the 2008 financial crisis. However, as I mentioned, this respite is coming off now. For example, if we look at some of the banks going forward, Bank of America ahead of the opening bell on Wall Street, also registering an extension of losses there. Also, across Europe, we're seeing a similar decline there across Europe. This is the SX7P, the European Stocks Banks Index. And as you can see there, quite a marked fall. Now, all this points to nervousness as to whether or not the contagion of SVB can actually be held back by regulators in the US or even across the pond here in Europe. The key thing to look at, of course, is the loan exposure. Now, Silicon Valley Bank UK Limited has loans of around £5.5 billion, deposits of around £6.7 billion, and SVB UK's tangible equity is seen to be around £1.4 billion. However, it's key to look at what these charts are telling us about the confidence of the market, because if we see more of SVB leaking out into the global loan market, don't forget many tech companies across the world, not just in the US, rely on SVB for loans, then we could see this play out far longer than we expect.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.